Saturday, April 29th, 12:11 p.m. New York time. This is a recap of the trade idea I shared during the week on the S&P 500 using options on the stock ETF SPY. Could as well have done it with the stock shares or done it with the futures contract, but this was done by me using options. So this is looking at option chain. This is looking back on the calendar day of April 26th. That was Wednesday. And see, the contract was to expire on that Friday. Yep, Friday, April in 2023. Had 2 trading days left. Calls and puts. This was a bullish strategy, and this was outright buying call options. So again, the underlying stock ETF SPY at that time was $407.74. So I was looking for strikes out of the money. So here's the strikes here, 407, and looking at the strikes of 411, 412. And at that time, 411, price to buy that was $75, as well as the 412, the price was buy at $50. So I bought those strikes. Going forward, looking at the 27th, yep, this was the 27th. Those same strikes, the 411, 412, they run up in value. What was $75 for the 411 strike went up to $147. And the 412 strike, what was $50, went up to $1. And let's look at the, again, it was 2 days, then it was what left with 1 day because it expired on Friday. So let's go look at the expiration day. Here's the expiration day, 4/28. It shows 0. That means they expire that day. And the 411 and 412 strikes, 411 strike went up in value, $576. And the 412 strike went up to $476. Again, when you close the option, because I was outright buying them at the ask, you'd be selling them back at the bid. Yep. So they were profits. It was a swing trade, a fast swing trade. That's why, again, I was looking to do options that expire that same week, which they did. Looking at the chart, this is the day I placed the trade. Yep, right there, April 26th. That was that Wednesday. And I closed the next day, Thursday. Yep, I closed 1 day before expiration. Again, Wednesday, Thursday, Friday. They expired on that day, but I closed them that day. So I left money on the table. Left a lot of money on the table for other people sharing. Yep. Again, I still made money. Looking here again at these daily charts, I didn't get exactly at the bottom, nor did I close exactly at the top. I'm going to show you intraday on the 30-minute charts how I did not get in on the bottom. Maybe it was careless of me, but at the end of the day, I still made profits. Okay, looking at the same stock ETF, SPY, on a 30-minute chart. This was Friday. This was Thursday. This was Wednesday. So the indicators I was using, I was saying that this sell-off was a lot of panic selling off, and I was sitting on hands waiting to get in. I thought maybe when this panic sell-off, that this day might be the day to get in. And I sat on my hands and look at that. Buyers started coming early. And shame on me, I bought here my options. Instead of what I traditionally like to do is wait till closer to the end of the day, which if I did, I would have got those options at a lower price, maybe different strikes. I certainly would have paid less, and I would have got a better strike. In hindsight, easy to say that. But even if I bought the same strikes, they would have been cost less money. Let's look at that option chain again. I bought the 411s and the 412s. Get 411s, 75, and 412, 50. So that's when the stock was at that price. But being that the stock price went lower, let's look at the chart. Lower here, those premiums were cost less money. So again, I would have bought them lower, and then closing them, when I closed them, bought them back. I would have had more of a profit. Yeah. So that's where I closed it here, a little after 12 noon that next day. So I had a working order to close. That's why they got closed there. And then look at that. Much more buying opportunities. Sorry. Much more pumping up. A lot more buyers were coming here. And they brought the premium up higher, which I showed you. And if you notice, let's look here again. 411, 412. Again, further out of the money, the higher the strike, because 407, 74. So I was at 411. It's closer to the underlining versus 412. So to make money on this kind of strategy, you need the stock to move fast, because again, you're buying options and buying the calls was bullish. That time decay works against me. Yeah. So if this stock went lower or slightly higher, but a slower rate, you could be losing. Yeah. Let's go and look at the chart. It was a fast move up, which had the premiums in those options. Again, let's look at the 411, 412. Get marked up really high. That was a great thing. Yep. Again, these expired this Friday. So this kind of trade, you cannot buy and hold these forever. They require money management, and a good money management being that you have a working order to close. So I could have adjusted it to bid in longer. And maybe I should have, easy to say, maybe should have kept a few contracts on for the next day, because the gains I made here was enough to cover the cost plus gains. So if I left any of them on that day, yeah, the value, again, just on that day alone here, or plus because I closed here, the value from here to there increased dramatically. And then in the morning, the next that Friday increased a lot. So even if I didn't close them at that end of that day, but in the morning would have been a wonderful thing too, because the value amazingly up. So if you bought them at, say, the end of this day, that was that Thursday, and closed them late Friday morning, that would have been gains as well as Friday. Yep. Now let's look at the S&P 500, but using the futures, doing a top down.